Hi everybody! Welcome back to the new norm post-COVID-19 semester. So, how is your semester break been so far? Hope everyone is doing well. I am happy to have all of you in Malaysian Taxation 2 TPA 5033 class. Okay, so what are we going to learn in this semester? Chapter 1, Partnership Taxation for 12 hours. Chapter 2, Industrial Building Allowance and Others for 12 hours. Chapter 3, Company Taxation, also 12 hours. We will also learn about this topic. Chapter 4, Real Property Gain Tax for 8 hours. Chapter 5, Investment Incentive for 8 hours. And Chapter 6, Tax Planning and Avoidance also for 8 hours. So, that 5, are you ready? Study smart, get a good grade at the end of your last semester here, and I wish all of you the best of luck. Hi student, Assalamualaikum warahmatullahi wabarakatuh and hello to all. For 8 weeks from today until early of October, we have to learn to live in new norm post-COVID-19, which the online learning has been implemented to ensure smooth process of teaching and learning. For that, all lecturers has tried their best to ensure all material has been delivered to the student. So please give us your fully cooperation to make this process go smoothly. We wish all of you a very good luck and see you in coming October. Dear student, before we begin, all students are required to download this application at puzzle.com. There will be some reflective questions that you need to answer in these notes. Kindly follow the instruction given. Okay class, today we will discuss about chapter 1, partnership. So let's begin. A learning objective is very important to make sure each student are able to conquer what they had been learning. So these are the 4 learning objectives for this topic. Number 1, each student should understand the introduction and existence of a partnership. Objective number 2, each student can conquer computation aspect regarding to provisional adjusted income, divisible income, statutory income, and total income. Number 3, each student should know how to allocate on capital allowance and donation part. And the last one is the student should know the type of tax submission form for partnership. Alright, so these are the definition of the partnership under Section 2 Income Tax Act 1967. It is said that a partnership is an association of any kind, including joint ventures, syndicate and cases, where a party to the association is itself a partnership between parties who have agreed to combine their rights, their powers, their property, their labor, and their skills. So let's have a look at the animations beside that. There are 2 persons who shake hands, doing a fist bump, jumping here and they agreed on something. Maybe they were partners. Okay? So if both persons agreed to share their right, their power, their property, their labor, and their skills, so there might be existence of a partnership. Partnership also can be defined when there are purpose of carrying on a business and they are agreed on sharing the profit and loss from it. But the partnership is exclude a Hindu joint family, although such a family may be a partner in a partnership. Partnership is not listed as a person, so there are no tax assessment on the partnership, but the tax assessment will be put under each partners. For your information, there are several types of partners in the partnership. Number 1 is full partner, who have right to the partnership and entitled to profit or losses of the partnership. This full partner also receive partner remuneration and allowance or commission and actively involved in partnership. For those who is full partner, the income would be under business income under section 4A. Number 2, salaried partner. Salaried partner means that partner have no right to the partnership and not entitled to any profit or losses of the partnership. Only receive fixed salary but not allowance or commission as a partner. So for those who receive salaried partner, the income would be under section 4B, employment income. So how about passive partner? Okay, some books call sleeping partner. This person does not participate and involve in the partnership business. This person only contribute capital and entitled to profit and bear the loss only. So this person income would be under section 4A, business income. Number 4, limited partner. Limited capital contribution to the partnership and not involved in the partnership business. Okay, for this person income would be under section 4A, business income, and the number 5 is corporate partner, partnership that consists of several companies and become a partnership. Right? So this would be under section 4A too. So let's look what are the creation and existence of a partnership. Each partnership must be at least 2 persons or not exceeding than 20%. They also agreed on carry a business with view to make a profit, or they have an agreement to combine their right, their powers, their property, their labor, and their skills. So these are the things that make the creation and existence of a partnership. 2 to 20%, and they must also agree to carry a business with view to make a profit, have an agreement to combine their right, powers, property, labor, and also skills. By reference to the books Agency, Partnership and LLC by Daniel S. Kleinberger, he said that a partnership agreement is a legally binding contract between at least 2 individuals or other legal entity. So, what are the details in the agreement? There would be a document regarding to the percentage of ownership and distribution of profit and losses. There would be a description of management powers and duties of each partner. There will also an information regarding to the term or length of the partnership. They also have information regarding to the how the partnership can be terminated, and maybe some other else information that they are agreed to put in the agreement. And the last one is how a partner can buy his or her share of the partnership. What if there is no deed of partnership or there is no other formal agreement between the partnership? Okay, so let's have a look at this example. Sam and Kamal has been discussed via handphone to open a small stall to sell durian at their Pasar Malam village. They agree to share the capital, time and skill to do the business. They also agree to share equally all the profit or losses from the business. The only problem is they did not have a formal agreement because all details only has been discussed via handphone. So, what do you think? Is the partnership exist? Okay. Yes, every partnership needs some agreement, but a partnership maybe didn't have to created by a formal deed or written agreement. The partnership can be created orally or in a writing. In certain circumstances, a partnership may exist even though there is no partnership agreement. So, the partnership between Sam and Kamal is already become partnership even though they didn't have a formal agreement. Okay, to determine whether or not a partnership is exist, the following guideline can be used. Number 1, preparation of profit and loss account that showing the partner share of profit or losses. So, if the company or the agreement, they prepared a profit and loss account that show each of the partners' share of profit and losses, then it can be categorized as a partnership. Number 2, there are certain manner in which partners operated their bank account and whether there are limitations to the signing of check. Number 3, they use a special registered name that carrying on the business and it is shown in the trade directory and business correspondence such as memo, letter and email. Number 4, there are some records that showing partner remuneration, partner drawing, partner capital contribution and interest paid for capital loan to the business. Okay, so when you found there are 4 characteristics that may show that's the agreement that they are doing a partnership. Okay, number 1, there are a proper profit and loss account in the partnership. Number 2, there have some special manner in signing check, control account books, go to bank. Okay. Number 3, they use a registered name, special registered name in their business trade. Okay, in their business trade, in their letter, in their memo. And number 5, there are a record that showing partner remuneration, drawing, capital contribution and interest paid for each partner. Okay. Alright? Dear student, I already shared with you the theory part in this topic. So these are the summary on part 1. Number 1, there are at least 2 person and maximum 20% agree to carry business for gain the profit. Number 2, they should be agreed to share right, power, labor, skill and property. Number 3, there are 5 types of partner and a formal agreement is not a compulsory. And number 4, there are 4 guidelines that can help us to determine whether a partnership is exist or not. Alright, so before we continue to part 2, these are some questions that you need to answer. Good luck!